All right. Good morning, everyone. Hope you had a great weekend. Hope you had some time to recharge. Happy Halloween with the kids. A lot of candies. So let's look at the mark. Let me just validate. Everyone hearing me all right? Just want to make sure before we start. Great, thank you. So let's look at the market first. Let's see what the market will look like into this week and how we can look to form a good game plan. So as usual, we'll look at the NASDAQ. That's what I trade. So just looking at price, we have a nice setup, and that's why I went away on Friday and raised back my exposure. So what I was looking is basically the same pullback pattern and setup that I like to trade and that my system is based around. So QQQE, we still have that base breakout, retest, reconfirmation of the trend, first step of the 21 DMA structure right here, 22, 23 October, new all-time high. And then we came to retest that base structure and also retest the 21 DMA structure. So we have our second pullback higher low structure as well. And Friday was kind of an indecision day in the sense that we didn't confirm high breadth, so we still had only 40 GDB rating. But that was constructive action because we're trying to absorb the sellers, stabilize in the 21 DMA structure, and that's what you want to see. So that was basically an inside day for QQQE. We'll have to look. So as usual, you have a pullback, you have some stabilization into the structure, rising structure. So we're still in an uptrend. That's important. But what you look for is for a daily reversal. So that short-term trend to shift. So right now we have still lower high, lower high, lower high, lower high. And then we need to reclaim Friday's high, or if today is another inside day than today's high, but we need to break that sequence of lower highs as we get into support to reconfirm the trend. So right now we are 3 days on a pullback signal. McClellan summation, I thought it flipped, but it was not enough on Friday to flip. But on the bright side, we had a nice, and we had an oversold reading on the stocks above their 5 DMA on Friday. So we had that oversold kind of bounce and hook up. So that's what I was playing. Price into rising support, rising 21 DMA structure, McClellan summation trying to hook back up, and breadth extensions short-term oversold with a hookup. So for me, that's kind of the market setup that I want and use to trade. And I never know, right? That's a very important mindset. I put exposure here, not knowing what will happen, and knowing perfectly that that's probabilities. The odds are there. The odds are higher that we resume higher simply because we are already in an uptrend, but fully aware that there's still odds that it fails and we start to break the 21 DMA structure. And in that case, then my new exposure risk is known. I took 1.5% risk to put back that exposure. And if it fails, I cut those positions and I wait for the next opportunity. That's as simple as that. Don't try to be right. It's not a question to be right or wrong. It's just a question to recognize where your edge is, put exposure with defined risk, And if you don't see what you want, if the setup is invalidated, then you cut, you take your loss. That costs you 1.5% to test, and then you just wait for the next opportunity. That's how trading is done. All right, so let's look at internals and futures as well. All right, so futures looking good. So keep in mind that QQQE is, yes, right into support, retesting that base area like we discussed. Still inside day, nice higher low structure as well on the right side. But the problem was that QQQ and SPY, so mainly because of the mega caps, were quite extended. And that situation kind of remained true. So yeah, we'll have to see how this goes. We still have that divergence between the Nasdaq and the small cap slash broader market. So we'll need to see at some point that rotation out of the mega caps and into small caps, or a broader rally, which we will see Nasdaq and SPY being more extended or just drifting sideways. But we get also the participation from the small caps, the broader market, QQQE, RSP, which is still below a declining 21-day MA structure. So I don't trade based on RSP and IWM, but I'm still looking at them and trading below a declining 21-day MA structure is just reflecting kind of the choppy market, the weak and thin market that we had recently. Obviously, I trade mostly liquid tech stocks. So for me, QQQE and QQQ track my basket of stocks better. But if the broader market remains weak and start to break down, then eventually the rest might follow. So that's something to keep in mind as well. For RWM, so small caps, we still have higher lows. We're still right into the rising 21-day MA structure. But again, we talked about that Friday morning, I think in the pre-market session. It started to be pretty choppy. So I don't know. Maybe we need some kind of shakeout, some big weakness to like shake out and just create some space to run higher. But yeah, unless the trend breaks, I'm not here to anticipate that. I'm here to trade what I do, and that's QQQE and QQQ. All right, so internals kind of pivotal point as well. So we'll have to look into that more closely. I don't know why the drawings are. All right, so let's remove that. Let's remove everything. All right. So once again, we had that retest of recent structure. And now for the past 4 days, so we had that Monday gap down on credit spreads. And then for the whole week, it rallied as the market pulled back. It rallied into a declining 21-day MA structure. So that's a key spot right here. We don't want credit spreads to spike. Maybe one day is fine, but we don't want to start trending above. That wouldn't be good, and that would be indicative of a risk-off market. So let's watch that closely today. We still have that recent swing low structure that still acting as potential resistance. We're still right into the declining 21-day MA structure. So we have a confluence of potential resistance that that might indicate some kind of rejection, and that's what we will need to create some more risk on market. And same thing for VIX. So VIX, we had that big spike. We broke the 21 day structure, but we still yet need to see that downtrend below a declining 21 day structure, a bit like here, a bit like here, over multiple weeks. And right now we're still within normal price action. So we break the 21 day structure, we retest, and that's what creates the waves in the market, the cycles, and what creates some room to for more upside in the market as the VIX just start to drift back down again below the structure. So good action on the VIX, but again, just like credit spreads, we don't want to see this spike above structure. Bitcoin, very weak. I thought we would be able last night to push and maybe reclaim that 21 day structure after attempting that daily reversal. We were not, very weak overnight. We are right back into the base structure here. We're still making higher lows, but I'm not sure that I really like what I see on Bitcoin. We're right into support, so that's the positive. Weekly charts still look like a potential base forming in the last few weeks and months. And yeah, we'll need to see if we hold that area. We had a nice shakeout, but eventually we'll just need to push from here. We'll need to reclaim that 21 day structure, because the more that we knocked on that support door, the weaker it gets. So at some point we might get that just swoosh down and break of base structure if we cannot find some buyers to reclaim that structure. So if that happens, then obviously that's kind of another red flag and risk off indicator. So we are kind of pivotal. You see that trend in the internals where credit spreads is right into declining 21 day structure. The VIX is right into declining 21 day structure, and Bitcoin is right into support as well. So if we bounce from support on Bitcoin, if we reject the structure on VIX and credit spreads, then all good. We're back into an uptrend, into the bull market, and everything is good. But if we start to see VIX spike above structure, credit spreads spike above structure, and we see Bitcoin break that base structure to the downside, then you'll see me be more defensive. I will keep my cores, but obviously the new exposure will probably have to go and be stopped out anyway. So talking about exposure, I took two new position on Friday, and I tried to focus in the names that just one sec. Someone requested to speak, but I don't know how to allow. I think she's not there anymore. All right, so if you have questions, guys, you can use the chat, and I'll take the question just in a bit. All right, so two new positions for me. So despite the internals, Bitcoin, RSP, etc., 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 I put that on the back of my mind. If that becomes reality, then we'll act. But right now, and as usual, I focus on what I do. I I narrow down my focus, and what I see and what I trade is QQQE inside support, McClellan summation trying to hook up, and we have that short-term breadth extension hook up. So that's my setup. I focus on that, ignore the rest unless that becomes red flags. So SoFi, so we discussed that last week. Obviously, we had that breakout on earnings and 3 days of pullback into rising 21-day structure inside that base structure. So for me, that was really the spot that I was looking for to initiate that position. Uh, I think I got a good price, especially with my had. Now it's back above base structure, back above the 21-day structure as well. And yeah, not sure that we'll get V-shaped recovery. I'm kind of expecting maybe some kind of choppiness on the right side. Maybe we need to create another higher low. I'm ready to give it the week as long as we hold the 21-day structure on this. Coin might go at the end of the day. Like I said, I was not expecting that Bitcoin weakness, and it's kind of tracking a bit Bitcoin, even if it's not a miner. Um, but yeah, it's not dead yet. The larger setup that I'm looking at is that base kind of breakout and reset with a higher low on the right side. It closed kind of weak on Friday. Maybe I could have closed that, but I wanted to be patient. So let's see if we can at least hold the 21-day structure, at least put an inside day, and in that case, I will hold that position. But yeah, if we start to break structure today, I will certainly close that position. All right, next one, Dell making a new all-time high on the RN news. There was some key investment in the AI ecosystem, so nice gap up this morning. Same thing for Micron. So Micron new, not yet. So new high above Friday's high, but new all-time high. Snow new high, and just keep in mind, right? Those are all my core positions. Last third, so I have a good core portfolio, and that's what I wanted. Now my game is to have that 60% exposure and just trail the 21-day structure and all those names. They don't have a lot of open heat, but that 60% of my core positions are really just a no touch for me unless they break their 21-day structure. So that's the kind of position where I want to be patient, right? VRT. So VRT not making a new high. I still think it needs time to build the right side here. We have a clear range in the last few days. We're still having a higher low, so we're not in full base building process. Only a small pullback for now. But I'm kind of expecting a bit more sideways action like we did in October, and maybe retest that range structure and recent swing low in that area in the next few days. That would be very constructive. CRDO, nice breakout on Friday, making a new high. I nothing to do trailing the 21-day structure. That's a name that might be a bit early in a bigger uptrend. So trying to be very patient. DDOG, so DDOG making a new high attempt, pushing pre-market. We have earnings this week on Thursday, so keep that in mind if you didn't already trim your position like me. Then probably a good idea to look to trim into earnings later this week. AMD earnings tomorrow night. So if you didn't trim yet, think about reducing your risk into that event. Um, I will personally hold my third position as I'm in my last score. My cushion and my gains are larger than the expected move on this. So I'm keeping my core position into earnings. CrowdStrike still breaking out from that big multi-week and month base. We're just flagging very nice constructive action. And that's my core as well, so I'm trading the 21 day mid structure. CEG. So, yeah, kind of doing exactly what we discussed, right? Building that higher low right into the 21 day mid structure, trying to fill that gap and retesting that gap low. Um, that's a nice spot. I want to be patient with this one. As long that we hold the 21 day mid structure, as long as we hold that kind of range structure as well. And keep in mind that we have earnings this Friday morning. So, yeah, if you didn't trim, so make sure to adjust your risk into that event as well. What is the band on your chart? So yeah, good question. So the band is the 21 DMA structure. And what is a structure? So that's basically made of the 21 EMA, so exponential moving average at the center of the band. And the upper band and the lower band are made of the 21 EMA, but calculated from the high of the range instead of the close as usually the 21 EMA is calculated from. And the low of the band is calculated from the low price of the day. So it creates that structure that is made from those lows, close, and high, close, and lows from each day. And that's basically the core of my system. I look for constructive action, reclaim, backtest, reclaim, pull back into structure, downtrend into structure. That's a no-go for me. I reclaim and then I look for backtest as a setup. That's really how I built my system, is simply by looking at price action around that band. Yeah, TradingView, you can go into the Git book. So it's crazy what you can get into that Git book, guys. But yeah, go into the Git book. If you don't know where the Git book is, you can go into the new members channels, education content as well, or the I think the Prime paid channel has the link as well. And you will find at the bottom of the wiki of the Git book, then you will find the link for that 21 DMA structure. And if you prefer to just use my template, then there you go. Yeah, that Chag is saying Gitbook is favorite website. So uh, that's still a work in progress, that Gitbook. But I really like what it became. Uh, it's kind of my brain dump, and it's good for me as well because I'm able to uh, externalize kind of my process, put that on paper, and it makes me reflect on my own trading, on my own system, uh, and it just gives a good resource to new traders, which is free, by the way. Uh, and that's not only kind of the usual resource where you have a setup playbook. I'm trying to make it as mental and psychologically focused as well, as I want to explain how I see the market, how I trade the market, and you'll find a lot of reflections uh, that I created over the years. So if you didn't check that guidebook yet, I highly recommend that you take some time to read it out. All right, so next step is to look at the focus list. So what did I have in the focus list? Yeah, so AVGO. Uh, and AVGO, we have kind of that cup and handle without handle. So that's basically what I want to see it build. I'm looking for that pullback into 21 DMA structure and to retest that structure right here. So I wouldn't buy that up here. It's too extended. But if we reclaim, not reclaim, but pull back further into that area, that's something that I would look to initiate a bit like SoFi on weakness right into the 21 EMA area for AVGO. And Tesla, uh, probably my most fucked up trade. And yeah, I didn't trade that well at all. And for me, the problem was probably the position size. Really still struggle to handle big position size. That's not where I'm comfortable. And to be honest, I'm really asking myself if that worth it. Um, I do have good performance, uh, and I believe that the most important is really to have uh, the proper portfolio size at the right market timing, and be patient with that exposure and be concentrated in liquid leaders. Um, and that's where I'm comfortable. That's where I sleep well. That's where I manage my trades well. And yeah, I just struggle with big position size. So um, yeah, I'm not sure I want to kind of go that route. Maybe that's not for me. And to be honest, I'm not at that place in my trading career where I need that like 40% position size into a stock that will make me rich. Um, I like my growth. I I have good capital, so um, like I said previously, and I wrote a big reflection. For me, 50 to 100% return annual is kind of golden. I don't really need more than that. And kind of going big into position and taking that additional risk, for me, that's taking huge capital risk because yeah, in the books, in the stories, on YouTube, you will hear that, oh, I made it big with that position, that I sized half my portfolio or my whole portfolio. But for every time you hear that story, there's also 4 or 5 story that someone doing the same thing but not going AV in the right name and losing a lot of capital and not being rich overnight, or not overnight but over a couple months. Um, so yeah, sorry for the rant. I'm just reflecting on doing oversized position for me, and that's what I kind of reflected over the weekend, that I mishandled Tesla last week. Uh, it didn't stop me out. It was still making higher lows, And the reason was simply that my position was too big, and I wanted to protect my equity curve. And if I didn't do kind of an oversized position, then I would probably still be in it. So, um, yeah, do big position if that's for you. For me, I believe in other things, and I do have good performance with that and those beliefs. So personally, I don't need that. All right, questions. So morning, Alex. Can you please take a look at RT? Oh no, we didn't finish the focus list. Sorry. So yeah, Tesla. The setup is still there. So I might just um, correct my mistake today if we have some weakness into the retest of the structure here. I would like to get back into Tesla. I still like the larger setup. I still like the short-term setup as well. So yeah, if you see me going back into Tesla, I might um, kind of trim SoFi or Coin and rotate some capital into Tesla. That would be a goal of mine. And the other names that I had into focus list were, yeah, so SoFi is still setting up nicely. We still have the daily reversal, so Friday's high as a reconfirmation of the trend. And coin is still setting up as well. So there's some weakness this morning, but we still have the daily reversal at 344.22 and the 21 EMA structure reclaim setup as well. So AVGO, coin, SoFi, and Tesla is the focus list for me today. All right, so let's take some questions now. RDDT. Yeah, no. Uh, so here's a problem, and that's a structure problem and a leadership problem. So you have that February high that we try to break out, kind of trap breakout, then breakdown, and that's where kind of weakness started and um, lagging action started as well. So it went in a downtrend below the 21 DMA structure when the market was doing pretty good or at least sideways. Then came the 21 DMA structure reclaim with a very weak backtest that we broke down and retested the lows. Then decent reaction on earnings, but look where we were rejected, right at that base structure. So if earnings change the story, then you can look for some constructive action, maybe around the 21 DMA structure as it creates a higher low, and you can look for that 21 DMA structure reclaiming backtests. But that's not where my focus would be. It's still very choppy, large range. It's not trading well. So personally, I would look elsewhere. There's a lot of thing, and it's way different from what I was. Okay, so speaking about the Git book, right? So yeah, so yeah, I'm pretty systematic. Uh, that's my nature. I am a former engineer, so I like for things to be clear, concise, within rules, and I think it served me well as a trader. So yeah, that's always a good thing. And here's the thing as well. So if you want to improve, uh, how can you plan to improve and know what's right and wrong in your trading if you don't have a clear system with rules put on paper? So how I improve as a trader in the last years is by having my rules, and each market cycle I was reviewing my trades, I was reviewing my rules, and each time I was having ideas to improve that rules or had some new rules to uh, kind of improve what didn't go well during that market cycle, um, and build up into those rules as I progress. So if you don't have a system, if you don't have rules, what will you change? How will you grow? Where is your foundation to build upon? You don't have any because uh, you're trading randomly based on your emotions and on your feel. So yeah, that's really important, I think, to build rules, build a playbook, build a system that you can later improve and change. So Ashish is asking about the colors on my chart. So yes, that basically represent my system. Um, so when we have a close above the 21 DMA structure, then it flips in black. Then we have a proper 21 DMA structure reclaim. And then if the bars are still black and we backtest into the structure, that's a valid setup for me. We are within uh, entry area. If the bars, if the bar is flipping pink, then we have a first close below the 21 DMA structure. And for me, if I'm already in that name, that's a sell signal. That's my stop loss. And if I'm not in that name, then I don't want to engage, or in some case trying to anticipate the reclaim. But if we are trending with pink bars, then it means that we are in a downtrend. We're not able to reclaim the 21 DMA structure yet, and it's not ready. That's what it means for me. Um, so GM, not sure what is the name that you're talking about. So nice weekly base and major news incoming. Maybe clarify what's the ticker. So Pidel, hi Alex, I have read that you don't want to go on margin the rest of the year. Can you explain if this is mainly based on that you have reached your annual goals? Yeah, no, it's not because of the market. It's really because of where I am year to date. Um, and yeah, at some point the market will stop to give free money or easy money, should I say. Um, we had an incredible run since April. Market is getting thin. Will it continue? I don't know. Will it stop? I don't know. Um, but all I know is I made a good annual return, more than my objective. And when I say I don't want to go on margin, I'm not saying I'm not trading. Uh, I was not trading with margin before. I was not trading with margin in 2020 and made an incredible return. So, yeah, it's still about taking the same trades, still about the same rules, but just not being 150 or 170% on margin after having a good year. So there's nothing wrong about it. If you don't have the year that you want and you still think the market is going higher, then be aggressive. But for me, that's just where I am in my performance, and just don't want to be caught in kind of a black swan event while being 150% or more on margin. So thought on Gilead. Damn, that's choppy. Oh my god. Okay, so 2010 to 2012 to 2015, that was a nice stock to trade. But since then, that's a nightmare. Uh, yeah, I wouldn't even look at that, to be honest. Maybe for an investment, but as a swing trader, that's also a biotech. So you have research development. That's all red flags to me. I don't trade biotech, by the way. And yeah, look at this thing. That's yes, that's a base, but I don't like to see those kind of big ranges. Uh, yeah, definitely. There's better stuff out there. What do you think about gold's action around? Yeah, we covered that. Good morning, Jellicatin. Um, yeah, what I think about gold is, and I'm not Nostradamus, right? But where are the odds are? And my opinion is that price put some kind of climatic move, and it needs time. And by time, I don't mean kind of the first initial pullback into 21 DMA structure. Uh, it did. I think we're kind of in that moment uh, right here. And I really think that it needs weeks and months to kind of digest uh, the climatic move that it just had. So maybe that's the that's the point we are, and it will climax even further. No idea. But once I see that rate of change, that big reversal, for me, that brain just scream climatic action, and the odds becomes to digest for multiple weeks and months. So I would stay away from gold, silver, precious metals, personally. CRWV. So earnings way too close. Monday. So you have the week. You can still look at last Thursday's high reversal pivot for an entry. Uh, but it's getting tight for earnings. TSM, yeah, that's still in the pullback scan, and that's a nice setup. Uh, that being said, uh, it's trading on the Asian market, and that's a sloppy name because it gaps up a lot, or down a lot. It gaps a lot, uh, because it trades during the Asia session, and then it makes the TSM ticker on the US market gaps, because of that moves in the Asia market. So I don't like that gapping nature, and that's why you don't find that name in my focus list. Notice you have your open price marker switched off. Open price marker. Oh, okay. The um, so HLC, that's what you mean, right? Yeah, I just don't care where it opens, and that's another reason why I switched to bars. I think it was last year. is and why I switched to daily chart as well, and on and on and on. It was basically to reduce the noise, reduce the number of information that my system and my trading is not based upon anyway. So I removed volume, it's not in my system. So same for open, and for me what is more important is the range and the close, so where the stock closes, uh, and which with HLC, so bars without the open, uh, the structure is also cleaner and easier to read. So that's why I made that move. Um, Alex, thanks for your clear explanation on Ben. Is it possible you share your trading rules? My trading rules? Yeah, that's what I said. Go in the Git book. Uh, I shared the Gitbook link in the new members channel, in the education channels, in the Prime paid channel, um, a bit everywhere. So go into the Gitbook. My trading rules are all there and much more. What is the difference between ping 21 DMA? Oh, yeah. Um, So when the center line is pink, it's simply that the 21 EMA is declining. So rising 21 DMA structure, basically uptrend, and declining, basically downtrend, more or less. Yeah, Pat looks very, very good. A bit out of my liquidity parameters. Um, But yeah, you have such a clean 21 DMA structure, pullback, high low structure, um, inside day right at the 21 DMA structure. So you have your daily reversal pivot to engage on the reversal. So yeah, I really like that chart. If I was not so strict about my universe and my rules, that would have been in the focus list for sure. Yeah, PL. So you have the daily reversal, still higher low structure. You have those lower highs as well. Still not sure what happened here. Um, but yeah, I would like to see that to prove itself above that 1372 swing high pivot. And that's where it found resistance as well on Friday. So I think that's the proper buy point to get a bit more confirmation, because I don't know, we're still in the downtrend, and that big breakdown was quite heavy. So maybe it just need more time to digest. I don't know, but if we reclaim that 1372, then we have more confirmation that there's a reconfirmation of the trend. All right, so guys, I see a lot of questions, and I'm sorry we won't be able to take them all. Uh, so I'll look if someone I didn't answer yet. Alex, now will you have fewer position or fewer position size? No, my point was not going like 30% position size like I did on Tesla. My sweet spot is between like 8 and 20%. SoFi and Coin, like below 20%, I'm very comfortable. But once I get close to 30%, uh, that's where I'm less comfortable, and what I want to stop doing. So being coin and Bitcoin, I talked about it at the start of the session. Maybe you can go back when I release the recording. I'm just trying to get a few more questions before we open. Hey Alex, could you maybe talk about how you are entering your ideas intraday? What do you want to see in the stocks? Yeah, I want to see. Yeah, that's hard to explain. So kind of the ideal entries, the daily reversal on strength. That's the easy entry. Once you get into weakness and pullback entries, that's a bit of where the arts happen. You don't have a, a clear entry trigger. That's a bit like watching the market tape, seeing the market find support, seeing intraday kind of seeing your names doing intraday higher lows while the market is going sideways or doing lower lows. So kind of observing the relative strength of that name as it gets into support, and playing your buy area. So something as well, super important, like SoFi. Uh, my buy area is 1 ATR below, 1 ATR from the 21 EMA. So kind of that area. So I was very comfortable buying a bit higher my initial position because I knew that I wanted to be patient as long as we build constructively in that area. I don't try to get the best price. I just want to put exposure in a liquid leader stock after good earnings that is pulling back into structure. So that's my game plan. I'm not trying to get the best low price, the perfect entry. And remember, go back into my Gitbook. Please reread the first part. For me, the setup is not important. That's not how you make money. You make money by timing the market right and putting good exposure at the portfolio level, right? Good exposure in the right name at the right spot. So for me, QQQE is pulling back into structure. You have breadth oversold. You have the McClellan summation trying to hook back up while already above a rising 10 DMA. And I have SoFi and Coin into buy area. So I put exposure, just playing the market cycle, playing the market wave. And I understand everything on X, everything in the books, everything in education is all about setups. It's all about entries. So we hear that day after day after day. But I think differently. And go into my Gitbook, the first part, you'll understand what I mean. All right, guys. So market is open. I hope you enjoyed that session. So Ashish, I will try to answer that last question in the trading pit a bit later. So take care, everyone. Have a good day. Have a good trading session. Cheers.